Alright, welcome back. Vote on account is turning out to be more like a no event for Indian markets because Nifty in last 2 hours has done precious little. The good news here is that 6,050 on Nifty is intact, but in terms of market breadth, the market breadth has reversed completely. Nilesha, Envision, let me get some closing comments from you. As an investor, will anything change? And if given an option to buy one stock the minute this interview finishes, which is that one stock you would like to buy? And you got to give me a name, I will not let you go.
Well, I don't think this vote on account does anything dramatically different for the market per se. Obviously, yes, if growth picks up on the auto side, etc., I think the numbers should start looking up because of these excise duty cuts. But having said that, I still believe that at least for the next 2 or 3 quarters, you would continue to see a very strong earnings momentum in the technology sector. I still would go by the NASSCOM guidance, which has kind of recently been given out in terms of the revenues growing at 15%. And I still believe that the frontline technology companies would probably do better than a 15% growth rate, which I think is going to be excellent in the kind of the way the domestic economy is shaping up and how the earnings from domestic led companies would be. So I think in that context, I still believe technology will outperform for the next 2 or 3 quarters at least. And therefore, I think companies like Infosys and TCS should do well. I think between the two, I probably believe that Infosys has a better potential to outperform. So if you're looking for that one name, I'd still say that Infosys continues to be a buy at these levels and will do extremely well from a 2-quarter or a 4-quarter perspective.
Nilesh Shah, Axis Direct, if I can turn to you now. Now that we have the gross borrowing number for the year, for the coming year, what kind of borrowing calendar do you think the RBI will announce, and how difficult will it be for the RBI to actually ensure that the government borrowing sails through at a time when liquidity is likely to be tight?
I think next year the government's borrowing program will have to take into account certain event risk and then certain technicalities which is coming from the local market conditions. The first and the foremost will be any change in the sovereign rating of India will have a direct impact on the borrowing program of the government from a cost point of view. The second thing is that if India does get included into emerging market bond indices, we could have unexpected investment flow from the FIIs, and that number could be running into probably upwards of $20 billion. And that could have a positive impact onto the way interest rates are going to behave and the way government's borrowing program is going to be continued. So sovereign rating change and the inclusion in emerging market bond indices are 2 big events to watch for. The third thing which we have to look forward to is the redemption profile which is going to change in the government borrowing program in FY15 vis-a-vis FY13 or FY14. Suddenly, large amount of redemptions, upwards of almost 150,000 crore, will be carrying forward in FY15 vis-a-vis less than 70,000-80,000 crore in FY14. So it's not only just the net borrowing program which we have to worry about, we also have to worry about the gross borrowing program notwithstanding the redemption which market is going to put in. So one proposal which RBI had made was about switching of short-dated or short-tenured instruments with long-dated instruments with certain select investors. Now that switching will play a very important role in the shape of the curve as well as on the broad level of curve. So overall, the gross borrowing programs will have to factor in this event risk in the global market as well as the local market. I reasonably believe that liquidity in FY15 should be on the positive side, as the M3 growth in FY14 and FY13 has relatively remained subdued vis-a-vis the heydays of 2003 to 2008. So there is some amount of flexibility on improving M3 growth, and if we get little bit lucky in terms of inclusion in EMBI indices, we could have some amount of flows from the FII side. Both these things put together could ensure that the liquidity remains comfortable, and that will help in easing or the passage of government's borrowing program in an easy manner without having an adverse impact onto the yield.
Thanks so much for joining in with that perspective. Quick closing comment from Punitha as well. The one thing that the finance minister didn't do, which the market was expecting, was that everybody thought he tweaked the import duty on gold. Now that the current account deficit is comfortably placed at about $45 billion. Surprised that he didn't do that, and in a sense, is that good for the currency? Because if he had, then we could have seen some nervousness on the rupee.
Yeah, I think actually, the
if you have to summarize the budget, I don't think it has done any damage at all. In fact, there have been some positive things for a lot of different sectors, including the corporate sector, the rural, the manufacturing, the youth. Now, with respect to the gold, yes, it was widely expected that the gold imports would be allowed again, and frankly, not doing that is very positive, because on two counts. One, I think it does help the current account deficit by not doing it, and second, there was some concern that by allowing imports would mean that, you know, leading up to the elections, there's so much cash floating in the system that that could be one reason why gold imports would actually be used, and some cash would flow into those that gold buying. So I think by not allowing that, it's both positive for sentiment as well as positive for the economy. And I think the other thing that people were widely expecting that hasn't happened is some kind of removal of the surcharges of you know, taxes on the super rich tax and some others, and those haven't happened either. So yeah, and I think in that sense the budget hasn't really done any damage.
Hiren Ved, Director and Chief Investment Officer with Alchemy Capital, also joins us. Hiren, good afternoon. Thank you for joining us. Hiren, I saw that you were swinging your chair, but there is no swing factor for the market. I mean, Nifty is pretty much status quo.
Yeah, I think, you know, I think the budget anyway is a vote on account, so nothing much was expected. Most of the big headline numbers are either in line or better than what you know, he had promised in terms of the deficit and the borrowing numbers. Though I think the credibility of the numbers for the next year would really you know, rest on the new government. So I think that there's nothing very much substantially earth-shattering, but having said that, I think whatever little help that you can give the economy at this stage is always welcome. So to that extent, an excise duty cut you know, across the board in the automotive sector and the capital goods sector is probably welcome.
Sandeep, auto and capital goods are clearly two set of winners. If Sandeep, autos and capital goods are two clear winners, how come the price action in autos and capital goods is quite anemic? They had a pop and both autos and capital goods stocks have reversed. Sandeep Tandon, is my voice reaching you? I'm afraid not. Hiren, do you think autos now could be in some kind of a leadership position, assuming that excise duty cut could propel some demand and the cyclical slowdown could take a back seat?
Yeah, I mean, I think that you know, auto is one sector that holds promise going into the year. We've had a very low base last year, and certainly I think that the excise duty cut will some extent, because from what we understand was that the inventory was building up. So to the
just getting some problems with our lines there. Punita, let me get a closing comment from you. Tomorrow morning when markets will open, will today's event be a history?
Yes, I think so, and I think the fact that the US markets are closed today because of President's Day also doesn't really give you any direction. So I think the market opening tomorrow will be very much dependent on what probably happens in Europe and Asia, with very little to do with what is happening in India.
Are you long or are you short in this market?
I think you can't really be short, that you're heading into the elections. You don't know what will happen. So you pretty much stay long, but you have to be very, very balanced, because you really don't know whether the economy is really going to improve significantly or not from here. And so should you really be in the cyclical industrial sector? I think you should, because all the numbers suggest some improvement there and the valuations are attractive, but you can't really not be in the export oriented sectors either. So I think you've got to be balanced.
Punita, we've extended our appointment with you. Appreciate your time and thank you for joining us.
Thank you very much.
Hiren, let's talk about the popular trade, the consensus trade, IT and pharma. Do you think life now for IT and pharma, which is considered as a safety trade, could change? Because if economy makes a comeback, for those who are hiding in IT and pharma, they could be tempted to reverse their positions.
Nikunj, I think that obviously what place FMCG took is now being taken by IT and pharma, but it has to be the case because that is where the earnings growth is there. And today I don't think that many investors are willing to take a bet that deep cyclicals will move. So I think the best way to play this is to have a kind of barbell approach, which means that you do have exposure to companies in the export sector and in the global sector, because that's where you're seeing tailwinds in terms of earnings, and typically markets always like certainty and earnings growth. Let's not forget that. But at the same time, it really depends on how each investor is reading the situation going into the event. But I think that there is an opportunity in high quality manufacturing and cyclical sectors as well, where valuations are very reasonable and earnings are at cycle lows. So if you are looking at the next 2 to 3 years, and I think that the economy should improve from where we are today at a low point, it certainly makes sense to look at that sector as well. So I think the idea is to have a balanced barbell kind of approach in the current market.
In 30 seconds, we will be joined by a very special guest from corporate India, Mr. Swaminathan Munjal, Joint Managing Director at Hero Moto, will be joining in live from the CII studio in New Delhi. But before we connect with him, I want to get a quick comment from Sandeep Tandon. Sandeep, we were talking about IT and pharma and how the spotlight is back to IT and pharma stocks as well. Would you agree with that view, and what's your first take on the budget?
See, first of all, it is definitely a positive thing. Okay, market is a clearly non-event, but I think is mildly positive and much better for the industry point of view. See, frankly speaking, we have been very bullish on IT and pharma. Okay, we still maintain that view. Okay, but overall, we have a slightly positive bias on the market and much more on the global equities rather than looking for a very bearish sort of thing, which most of the people are looking at from the current levels.
Sandeep Tandon, there is a fear in the market that the excise duty cut in autos or capital goods or consumer durables may not fix the problem. The problem is demand, the problem is not pricing. What are your thoughts? Do you think one should still not buy into cyclicals?
See, first of all, let's look at much more broader picture. If you are looking from the risk point of view, neither the global risk indices, or if you look at the rupee movement, or even in fact looking at the bond yield, nothing is indicating that something is worse is expected. Okay, so if I have to look at these data points which clearly indicate that future outlook is slightly more optimistic than the pessimistic the way market is reacting. Okay, so I don't think one should be looking too much into these data points. Again, these are only 2 or 3 months events. I think it's a good step if demand picks up because of these excise benefit, and fooling knowing that this sort of thing is there only for 2 or 3 months point of view, I expect some demand should pick up in next 1 quarter.
And Hiren Ved would urge you to stay with us, but we've got a special guest joining in from corporate India, Swaminathan Munjal, Joint Managing Director at Hero Moto, joins in live on the show as well. Mr. Munjal, thank you for joining us here at ET Now. Appreciate you joining us. Firstly, there has been plenty of SOPs for the auto sector specifically. Your reaction to that, does it come as a bit of a surprise to you, or were you expecting these SOPs, especially on the indirect tax front?
Let me give a slightly broader response, if you don't mind first. First, I think overall this is a very good job done at the kind of time we are. He's managed to maintain both the fiscal and the current account deficit within revised targets. He's also not given in to any temptation to announce populist, make populist announcements so close to a new budget. And he's focused on the 2 or 3 areas which have a big multiplier. The automotive industry, as you know, has one of the largest multipliers, and the demand has really been suffering due to the economic cycle and the cost of funding both. And this, we believe, will be a good move forward for all sectors of the automotive industry and those connected to the automotive industry. So from that perspective, it is certainly a good move.
Sunil, you've got two pieces of good news. One, of course, is the excise tax reduction, and the second is the good agricultural growth that we're going to have this year. How much of a difference do you think it's going to make to a company like yours?
I don't want to do any guesswork right now, but it's clear if you see what's happened over the last year or so, demand has been depressed pretty much across the board. And you've seen it in two-wheelers, four-wheelers, and even more so in commercial vehicles. So he's focused on reducing excise on all of them and the capital goods which go into manufacturing. So he's actually done a reasonably good job in that sense. I think it will make a difference. How much, only time will tell, because the overall slowdown is still there in the economy. The global economy is still slow, and cost of funding in India is still pretty high. So a good monsoon is always helpful, and we are seeing hopefully some early signs of that. And we hope that in the next couple of months, and the crop is out, that the demand cycle should improve. Although ideally it actually starts to improve earlier than it has this time. But as I said, the real test will be over the next few months as to how the market responds. But this is a very encouraging move.
Mr. Munjal, stay with us. We've got Swaminathan Aiyar, consulting editor 18 also, who's been leading our coverage. Swami, your take on what has been the consensus reaction of corporate India? You know, we had Mr. Mistry, Mr. Godrej, all of them of the view that the numbers do look credible, and they all believe that the finance minister has done a good job given the circumstances.
Well, let's face it, corporate India has always been very polite to finance ministers. After every budget, if you ask them, what is the rating, and hardly anybody gives less than 8 out of 10. They say something very different perhaps in private. But I'd simply say that on this particular occasion, there is really not very much to say. This is, after all, not a budget. This is just an interim statement. As to what is actually happen next year, frankly, there's no point taking these figures seriously, because they will change completely when the next finance minister comes. His tax proposals will be very different. So, I mean, I can understand that till now, I mean, if you go by the figures, they're not bad. But I would like to ask Mr. Munjal one thing. You know, Chidambaram says there is this global slowdown and we have suffered. Okay, the two-wheeler industry is in problems in India. Nevertheless, Mr. Munjal, you are planning to sell abroad in many other developing countries. So are conditions in those other developing countries better than they are in India? And if so, how do you explain the difference?
Do you want me to respond? So,
yes,
many of the developing countries are suffering like India. Some are doing better than us and some are not doing as well as us. So, the situation is reasonably mixed. So, in India itself, we have seen, and I've said this on record earlier, that in the last 10 or 12 months, the government has done some good work. But before that, it's clearly, there was a lack of decision making, which has also helped or made the situation more difficult for the economy. But to be fair, in the last 10 or 12 months, a fair bit of work has been done. And I agree with you that today is only a statement of account. Besides the few announcements that he's made, which are policy announcements, it is a statement of account as it's supposed to be. But the 2 or 3 areas he has touched are certainly useful. The automotive industry, as I said, is a big multiplier effect on industry and on the economy. And so do skills and education.
Mr. Munjal, Bajaj Auto claims that their export margins are higher than their margins in India. Is that the case for you also? If so, what does it say? If that is the case, it suggests that really the global demand is much better than demand in India, even though you are exporting to other emerging markets like us. So, I mean, first, is it a case that you also have better margins for export? If so, what are the consequences for your strategy?
First, I don't want to get into a debate on TV on what we are doing in our company, but I can tell you that the global market is an attractive market increasingly for Indian companies, especially as the rupee-dollar exchange rate has changed in the last year or so. It has made export markets more attractive. but it's not a case that all export margins are higher than domestic margin.
Just to extend the debate further then talk about the big picture, like Swami was pointing as well, and a lot of our experts have been saying over the last hour and a half right here on ET now that, that the market will take some of the numbers with a pinch of salt. It's quite possible that the new government, as and when it comes and presents the full budget, could revise the numbers, especially the one on fiscal deficit. We saw it happen in 2009, even though the UPA was voted back to power. Is corporate India also equally skeptical?
I think on the fiscal and the current account deficit, they seem reasonably real. If you see what has happened in the last few months, there's been a big squeeze on spend, especially the government spend. And so I don't think these numbers will be too far off either way, even if they are revised by the new government, as they very often are. So I have no real concern or worry on this.
Munjal, one significant change in the composition of the GDP growth that we're going to have this year as compared to the previous year is the fact that the greater part of it comes from agriculture. Now, does this work hugely to your advantage as compared to entirely service-led growth for a manufacturing company like yours, and that to two-wheelers? That should work hugely to your advantage. So, are you very upbeat on that?
So, the rural demand in India has been quite good and has grown over the last 10 years or so. And any time you have a good agriculture growth, it certainly helps demand of consumer products now in India and of durables. And you can see that across the board. It's for us, of course, as a company, it is always beneficial to see higher growth in the economy in any sector. Agri, of course, contributes significantly to the growth in the rural areas.
Mr. Munjal, thank you so much for joining in live and exclusive here on ET now with that perspective on the vote on account. That's India Inc.'s word for you. They all believe that the finance minister has done a fair job given the circumstances. And of course, this is not a full budget, but just an interim one. Experts disagree with that view to some extent, but of course, we'll leave it to the market to really deliver its own verdict. Time for a short break, but on the other side, get you some more stock ideas and investment ideas from our top technical experts who are joining in just 2 minutes from now. Keep it with ET now.